Hello guys, my name is Alejandro Zambrano, the Global Chief Market Strategist with ATFX. Let's talk about the UK labour market. The next report is coming up on Tuesday next week, and it's going to be interesting to see what has happened with the labour market since then. This is a graph showing you how this unemployment has developed over the last few years, and you can see that the unemployment rate is at record low levels. So the UK labour market is doing very well. If you look at things like wage growth as well, you can see how people making more money now than they have been for at least 9 years, at least on an annual increase. We're almost approaching a 4% growth rate. So all this is very, very good. And if you look as well at inflation is pretty much at 2%, and core inflation is just slightly below that. So usually when you have a strong labor market and you have inflation at good levels, the central bank would usually go out and increase interest rates to keep inflation in check. However, though, because we have a high risk of having a no-deal Brexit on October 31st, the central bank is not doing anything about it. And what's happening is that the currency is declining, adjusting itself for the likely scenario of a no-deal Brexit. And this was obviously just going to increase inflation going forward in the UK. But the central bank wants to keep interest rates unchanged. Right now, it doesn't make sense to raise interest rates because other parts of the economy, like investments, are very weak. The housing market as well is very weak. So increasing interest rate is just going to hurt those sectors even further. And so just increasing interest rates to limit the slide in the pound would not make a lot of sense. As well, they don't want to make any major changes because if we do have a no-deal Brexit, they will be able to cut interest rates further, and that should hopefully support the UK economy. Now, if you're trading this market, it's rather straightforward. You're dealing with a very long-term trend that is bearish, but if we just focus on the short term, it's quite clear to see that as long as you trade below something like 24.66, which is this level up here, that we're going to continue to trade lower. And I think if the market would swing up to something like 123, I do think people are going to try to sell between 123 and something like 124, and then target these levels here seen in August. Beyond this, obviously, it's very difficult to say what's going to happen. If we do have a situation where they manage to negotiate a good deal for the UK, that doesn't, hurt economies a lot in the short term, we could potentially see a bounce. If not, if you look at this chart, which is the monthly chart, you can see how a break to the 2016 low is going to take you down to the next low, which is here at 105. And that level is from the 1985. So we're talking about significant changes coming up here potentially in the British pound if we don't get some sort of a deal or some sort of optimism at least that we're going to have a good deal that could potentially cause this market to trade upwards. Okay guys, thanks so much for watching. If you have any questions, you're most welcome to reach out. Thank you.